Hi, this is James Shrug with Westpac London's end of day report for Thursday, the 10th of November. Not quite end of day, I'm doing it at 2:45. I've got a speaking commitment tonight, which means I've had to do this a bit earlier than normal, but we have got US markets just having opened. Europe very much in focus today. The European Central Bank has reportedly been buying the bonds of Italy. This is part of its program that's been running since May of last year. It fired up again in August of this year when it started buying Italian and Spanish government bonds. They've not been buying them in a big way, but sufficient though to bring yields down from around 7.3% down to 6.8%, back below the 7% area. Nevertheless, Italy issued 5 billion euros worth of one-year notes today at a yield of, I've got it here, yield of 6.09%. That's up from 3.57% just 4 weeks ago. So an increase there of over 2.5% percentage points in just 4 weeks. Just illustrating how much more problematic it's become for Italy to fund its deficit and 120% of GDP debt ratio. With 300 billion euros due to be rolled over or maturing over the next 13 months, there's a big task ahead of Italy, and it's going to be a big problem. We've had confirmation that Lucas Papademos, the former Vice President of the European Central Bank, he will head up the new interim unity government in Greece, which is going to push through the austerity measures there as part of the Greek bailout commitment from the rest of Europe. The EU Commission today published its 6 monthly forecasts, its autumn forecasts. We think they're a bit unrealistically optimistic. Their forecast, for example, for Europe or Euroland in 2012 is 0.5% growth, down from 1.9% in their previous forecast. At Westpac, we're sitting on minus 0.6% for Europe or Euroland next year, which is, unfortunately quite a decent recession. The EU Commission numbers imply that Europe will pretty much just skirt around the edge of recession next year, and we think it's going to be a much more serious outcome than that. We also get European GDP numbers for the third quarter, coming out next week. Our forecast is 0.1% growth in the third quarter, but that will be the last quarter of growth for at least 4 quarters, with flat or negative outcomes likely from the fourth quarter this year onwards. In the US, we had some good numbers today. The trade deficit narrowed by almost $2 billion to $43.1 billion in September. There were previous favourable revisions as well. Exports were up 1.4%, their third monthly gain, whereas imports grew just 0.3%, and that was their first rise since May. So we've had much stronger exports than imports in recent months. And basically what it means is that over this year so far, we've seen a stabilisation in the US trade deficit, whereas over the previous 18 months, from the middle of 2009 to the start of this year, the deficit was actually widening again. That widening trend seems to have stabilised now. Initial jobless claims fell 10,000 to 390,000. That's the lowest reading on claims for 7 months. If sustained at this new lower sub 400,000 level in subsequent weekly data, that'll be a sign that the US labour market's actually doing a little bit better than it has been up until recently. Canada recorded only its second trade surplus for the year this year on the Bank of England on hold, and their asset purchase scheme, which they fired up again a month ago, has been maintained at £275 billion. That is, with the extra 75 billion that they started a few weeks ago still underway. The Bank of England will publish its revised quarterly forecasts next week, which are expected to include a pretty high probability that the UK will be in recession, and certainly that Europe will be. All right, so that's it in terms of events today. In terms of markets, the Dow, which has only been trading for 10 minutes or so, is up around 1% at the moment at 11,898. FTSE's up 0.25%, the French market up 0.5%, and the German market up 1.2% today. Remember, these are all at least 2 hours or more ahead of the European close, and substantially more trading still to go in the US, which has only just opened. On commodity markets today, we're looking at a 1.8% rise in the crude oil price, $97.43 a barrel. Gold's down just over 1% at $1,772 an ounce, and copper prices are down 1.8% today. The Aussie dollar actually dipped to as low as 1.006 against the US dollar, about 8 o'clock London time this morning. In other words, just 0.6 cents above parity, but it's back up at 1.016 at the moment. So it's about a cent above its lows of the day. That's it from me today. I'll be back again same time tomorrow with the daily and end of week wrap. Okay, see you then.